Hey guys, today there's another update video on Bitcoin and Ethereum. We're looking at the level 2 data, we're looking at the liquidation heat map, which is super exciting right now because it's glowing with liquidations all around us. And the question will be, what's the next price move going to be? Level 2 data, where institutions have currently positioned themselves, or even big whales with these orders that show me a pattern. I want to share that with you too. But what I also find super exciting today, let's turn off the highs. Let's take a look at the whales. The whales are actually starting to accumulate right now. Yesterday, for the first time, they bought 14,000 Bitcoins at a price of around 70,000 US dollars. Which is obviously interesting to look at as we dive into it now. But what could that mean? Does it mean that we're having a rally now? And I want to show you later in the video what usually happens when whales accumulate. And I definitely want to keep that in the back of my mind. But first, before we dive into the Bitcoin analysis, the Ethereum analysis, I want to ask you, are we maybe overlooking something? Are too many people expecting prices that are too low, which might not even happen now? Personally, I'd say if we're in a bear market, then the bear market bottom here at 1.5 months would actually have been way too short. Accordingly, I'm still of the opinion that we could see much lower prices. Because even in the last bear market, if we look back, we also had just an accumulation here, then another rally down, and only then did an accumulation phase follow. That was actually a consolidation. So 1.5 months would be quite short for a bear market if that really was the bottom. But local bottom, what's interesting to me, if you're new here, feel free to subscribe to my channel. I'd be happy to see a comment and a like under this video. But you'll find the second video in the playlist, Learn Trading Step by Step to Pro Trader. The easiest method to predict price targets, but 99% don't use it. You already know this from my past analyses. You know it from the long-term analyses, it worked very well, allowing me to sell Bitcoin and Ethereum at the top. And now I want to show you something. If we go in here and include the Fibonacci extension level, then that would be in this structural break we had here from this uptrend after we initiated the downtrend. That's the first important level I told you about. That's the 1.414, where we already had the first recovery. But in the meantime, we've broken through pretty much every target level to the downside that is valid for me now, down to the level 2 target, and even went a bit below. Meaning, if we go purely into technical chart analysis with the Fibonacci target levels, we also see here that we might have hit a possible local bottom. And that it could lead into the first next rally. Because the local bottom we're seeing right here, if I mark it now, actually went into the all-time high from the last bull market. So that looks exciting already. Currently for a slight rally, but we'll go through that in detail later. But we're seeing the same pattern. Are we maybe really overlooking that right now? It was no different here. With Ethereum, we had the structural break to the downside, had a recovery. And if we look at that, target levels 1.809 and 2 were reached. So right here too, we're within this target level, and they were triggered wonderfully and cleanly as we go in here. On point, look at this. Candle close, right in here, wicked in here again. So the question is, are we actually facing a short-term rally, or are we going to drop another level lower first? Regarding that part, maybe we're missing something, because in the detailed analysis, I'll show you some other levels that are interesting now. Now let's take a look at the whales. Those holding over 10,000 Bitcoins, as mentioned, they accumulated 14,000 Bitcoins yesterday. But if we look back at the past, when they start accumulating, 80% of the time we see a crash shortly after, or maybe a small relief rally they want to catch, but then the market continues to fall further down. And if we go in there, for example, here whales have started to accumulate. The yellow line shows how much they're buying. So when they start buying and the volume they're purchasing, and if we look closer, we can see that they have started buying. What happened? The market recovered a little bit and then went straight into the crash. And that was the moment when the whales actually started selling off massively. So whales with over 10,000 Bitcoins are actually more present with large accumulation phases when the market really enters a bearish trend. So this could be an indication for us that we're really going to go even further down. We see this happening with some regularity. Here too, after a long sell-off phase as the market rose, where they sold continuously, we saw them start buying, the market went up a bit and then had the next crash. And only when the crash reached the bottom did they start selling again as the market rose. So the question is this current accumulation actually just the harbinger of a possible next crash? And we see this regularly in these cases that when they buy, here too, they started buying again. And what happened after that? The price continued to go down. We also have a few other phases, I have to say that too. Although here too, if we look in here, it's exactly the same thing. The whales started to accumulate massively as the market was heading downwards. So maybe you should keep in mind what the whales are doing. It wasn't always like that, and I want to show you that in this area. If I zoom in here, maybe we have this exception right now. Whales started accumulating while the price was rising here, and only after we formed the top did they start selling off again. So that would of course be the more interesting part now. The sharks are a bit more exciting at the moment. Why? Because normally the sharks make really good moves. If we look at the past now, I'll zoom in on this part now so we have a bit more of an overview. We see at the present time, however, they are selling. They sold 29,000 Bitcoins. Are they now in preparation saying, okay, we're starting to rise now and we'll sell bit by bit? Because they also had, that was the only major wrong move I've seen. After this crash down here, they accumulated massively and we went much further down. But they continued to accumulate, even down here. But now they're selling off a little bit. Normally it's like this, they make really clean moves. You can see up here, the price is rising. The sharks are selling off and gradually selling into the rising price. If the price hits a low, they start buying in and accumulating new Bitcoins. And as soon as they've reached a certain price level again, they're selling off completely. And because they've accumulated so massively and are now starting to sell off, that might be a sign that we could go up. Nobody knows for sure, yeah, we'll see, but let's move on to the Bitcoin analysis now. Honestly, I have to zoom out. We need to go to the daily chart. It's getting a bit boring in there by now. A few trades are placed. Our trading bots overall are running quite well at the moment too, so almost everything is in the green. The coin multiplication bots, the coin M bots, they're also wonderful. They've all already generated Ethereum's 1.8%, one 0.13, one 4.98. Now overall, that one currently has minus 10.8, but it's already generated nearly 10% in grid profit. And also the Coin M positions are currently in profit, but I'm not too happy yet. I'll tell you how it is. Ethereum in profit. We have Bitcoin in profit. Those are also the somewhat larger positions with around $15,000 to $20,000 each. And then some smaller Solana and XRP positions. But I'm still remaining cautious. My first target level, let's dive into Bitcoin now, because if we analyze this in detail, we're still in a massive bear flag. You might remember this chart that I presented to you back then, where we actually had a sell-off, another sell-off after each of these strong sell-offs, followed by consolidation zones. Could of course happen to us again now. Despite everything, I'll say for now, because we're actually getting some buying pressure. We're regularly trying to sell off massively here, but that's becoming very stable again. At least at the current moment, it looks quite stable for now, so that we reach higher price targets. And let's go back into the Fibonacci levels. I also have a video here where I explain it to you completely, the simplest trading strategy. And you're not using it yet, feel free to check it out. Now I see the next rejection levels that could reach us. At the 0.5, the 75,233. Why is that interesting? I want to go through this with you using the liquidation heat map. We have a liquidation cluster here in this area on a 3-day basis, around 75,000. But I'm going now, I want to show you that in 2 weeks right away. We'll also look at the 1-week view. It's actually like this, so that we have a really bright, glowing cluster up here, which wouldn't be uninteresting and could bring about the two situations if we were to really just pick up this cluster here now. And that's, sorry, I didn't even say that. If we look at this cluster, we have this large cluster from about 74,500 to 75,000 US dollars. Where do we have that? 0.5 Fibonacci? Because if we continue to rise, more liquidity will of course be built up. But if we were to go a bit higher here now and really trigger that, it's a possible rejection level, the 0.5 Fibonacci, the first one, which however coincides with this bear flag and could be a new rejection level. But I'd be careful for the following reason. That's actually just a small Fibonacci level if we include this here. So exactly from here to here, that's not really a 100% confirmed Fibonacci level. Why? Because this high right here, the high we have, that's our swing high, and this is our swing low that we actually have here. Because from this sell-off, I've marked it specifically, we haven't reached the 0.5 Fibonacci yet. Accordingly, if I pull the Fibonacci from up here down to here, then the following 0.5 level results approximately 78,900 US dollars. And what do we see here? I've set this up again, specifically clean for you. We have the 0.618 from the small Fibonacci level and the 0.5 from the large Fibonacci level, which converge here. So this could become an exciting level. If we look back into the past, what kind of level is that? Should we really get a rejection here? Because it doesn't look that exciting now, with exceptions we must say, that we have a small consolidation here before the sell-off continued. But I'm scrolling back, Take a look when I go into this last correction where this level actually lies. A strong support zone that then led us back up again. So could the 0.618, if we rise, be the next really interesting rejection level for us to go further down? Accordingly, I will also gradually place short positions here because the next larger level would be 0.6. 1/8 from the large Fibonacci and from the small Fibonacci, the 0.786. That would then be this level. And if we mark these two levels here and go back, we simply see this support zone. We can then go further. I haven't done that yet. If we look further back into the past here, where would it be here? We had reactions, of course, but not that exciting now. Nevertheless, that wouldn't be an uninteresting level. And we mustn't forget we had massive liquidity there, of course, where we also have the point of control of the volume area around this 0.786. I can briefly turn on the VPVR here. It will likely show us that we have a massive volume area here. Exactly this area, which is interesting if we rise that far, but that's still a long way off. From 80 to 90,000 US dollars. So much for that for now. Regardless, I'd be careful, and that's because let's go back into the liquidation heat map. If we have a rally to these liquidation levels now to around 75,000 US dollars, we shouldn't forget one thing, we still have something down to 65, but if we go to 1 week, the whole rise of the last week. And why is that interesting? We've started having only an increase in the last week, which means we have very nicely a very bullish momentum here, not marked by any red daily candle. That can be very interesting for the market makers, for the institutions out there saying, okay, we've been bullish for so long now. Do we want to pump further or do we want to pick up liquidity first? Which liquidity do I mean? 1 week just looks so interesting. Take a look at this cluster here, 69,000 to around 67,000. We need to mark it here. Where is it? These are the 69,000 here. They're here up to around 67,000. That would be this price range that we could roughly enter here. If we activate the Fibonacci level, it's a bit too large on a daily basis. We can go back to the 4-hour chart here, then I can see it a bit better with my auto Fibonacci levels. We see in the price range where the liquidity lies, it's 0.618 to 0.786 Fibonacci. And why would I also be cautious? Because of the 0.786, we have this here at regular intervals exactly after breakouts, repeatedly reaching very deep Fibonacci levels. And I can show you that here again, that if I make an increase here now, yeah, the next Fibonacci level went down almost to 0.786. It wasn't just like that here. We also have here, as we had a structure break downwards and then the recovery, if we include that, 0.786. So we've actually only had it once in this whole area. It was also the case here that we actually had a nice breakout. And it was also like that here in this consolidation phase that we even came far below the 0.786 Fibonacci. Accordingly, it's exciting for me. If we should see that now, I'll just adjust this here briefly. We'll just turn on the bullish one now, then it looks a bit cleaner on the chart. That if we have a recovery now, we shouldn't ignore this liquidation level of 68,700 to 67,330, which would still be in that range. The 69,000 would be a bit above that. That would be this support. But for me, if we correct, that's a super interesting level. The only problem I still see with Bitcoin right now is simply that we haven't been able to break through the high to the upside. That's why I'd also be cautious with the bullish phase at the moment, because nothing is happening here right now except that we're being messed with a bit, to be quite honest. Small downtrend, small uptrend, it can now develop into a downtrend again, provided we really break these lows further down later. Accordingly, with Bitcoin, we also see exactly in the range of 68,000 to 66,000 approximately, which is also this area I've drawn here, even a bit more. We have order volume here that came in, at least from the weekend, where people say, if we go down to these liquidation levels. And strangely enough, they coincide with liquidation levels again. And people have placed themselves exactly here. And we have the Fibonacci levels here at the same time. That means if we see a dump downwards, we now know the zones from 68,700 to about 67,000. And 66,000 could become interesting in the event of a correction. Then let's move on briefly to Ethereum. Because with Ethereum, we actually see something similar to Bitcoin. And here too, we have alignments again. Let's stick with the Fibonacci levels for a moment. There's actually something completely exciting, which will be super interesting for me as a price target zone if we have a breakout to the upside here. We also have two Fibonacci levels here, one from this high and one from this high, because we have here, you can see it here too when I zoom in, from this correction downwards, we didn't manage to trigger the 0.5 Fibonacci. Therefore, that was actually invalidated in that case, and we would still have two possibilities. The small Fibonacci level from this high to this low would be the 0.5 here, which would be the first target level here, the 1.414. And there we see this alignment again here between the 0.5 and the 1.414 levels. That means a rally in this rise, if we break out, would of course be interesting. So that one says here, okay, the next correction could come, maybe with a retest into here. If we look at this in the past, where would this level be? Take a look at that. That was a strong support level right in this area. But that doesn't mean that just this level here is enough, because let's look at the next target level, an even stronger support level right in this area where the support level was much more intense. And if we then go to the next level, and this gets interesting, 2,550, because we have several confluences there, as we can see here. And going back again from the past here, we would actually have the point of control of the highest traded volume from that past before this breakout occurred. Should we experience a rally now? And I'm taking these three lines out again. It's just for comparison, where we come into past volume from the past. But if we go in now, first the interesting level, which of course is a candidate for a rejection. For me now, it would be this confluence between the 1414 level and the 05 level, around 2,390. Then we have the 1618, a very valid level normally, but that's exactly where we're heading now. We see here, the 1809 target level meets the small 0618 Fibonacci and the large 05 Fibonacci. At the same time, we also have a fair value gap here. That means I can briefly turn on the smart money concepts for you, then it'll be visualized. And exactly this fair value gap that I mean here would come in right here. So for me, an ultimately interesting level to short are actually the roughly 2,500 to 2,600 US dollars in that area. In there, because we have so many confluences, that could suggest that we might see a major rejection. If we see a relief rally, a fake out, and really see lower prices, then this would be a rejection level that I see as very valid. But for me, it's a level I definitely short anyway, because even if we continue into a bullish market, we'll probably rise less continuously, but likely with more of a correction, because we've had a long accumulation phase that would be super interesting to test again. And after that, you can build up long positions again, because if the price action is clean, then we could include that just as well. If we now look at the liquidation levels at the current time, 3 days, and I'm just talking about Friday until today, so we have the weekend included in there now. We have quite a bit lying down to 1,990 and 1,960. We mustn't forget we're going to draw that in. Let's go into the 4-hour chart, 1,990 to 1,960 US dollars. Let's draw that in. Where would that be? 1,990 would be around here, down to 1,960. That would be at least a liquidation level on a 3-day basis. Let's see if a fib level would come in here if I activate it. That would be the 0786 here again. That's a super exciting level. So for me, the 0786 is actually interesting because of the 3-day basis. But if we also compare that with the liquidations that reach down to 1,960, we could really test the 0786. And here again, nothing else has happened. If we say we've had a small upward structure, just like with Bitcoin, so we were a bit misled because 0.5 and 0.618 barely held here at the 0.786. This was actually the reversal level again. Here too, nothing else happened during a massive rise. You think, okay, nice structural break, and what happened? We went back down below the 0.786 Fibonacci. And even if we look in here at the last rise and include that, what was the target level again? 0.786 target level. Accordingly, I'd be careful about going long too early here. It could work, of course. Maybe we're breaking out right now. Maybe we're having a breakout now, but as I already mentioned in the signal group, at least the middle part would be interesting to pick up. But if we get a rejection due to liquidations, I would keep an eye on the level around 1,980 to 1,990 US dollars. On a 2-week basis, it's actually a bit different for Ethereum. I checked that earlier compared to Bitcoin, because you might remember there's an incredible amount of liquidity for Bitcoin at 75,000. But we're missing that on a 2-week basis for Ethereum. There, the 1,990 is more interesting. And below that, at 1,900, we have something lying there. That would be in the 1,900 range if we were to test the flag down here again. So that's very, very exciting to watch at the current moment. And if we now move on to the large orders and whale trades, we can see here too that since this weekend, a few order clusters have placed themselves below us. How much is that if we analyze it now? At the present time, there are about 170 million in perpetuals, so in futures. Plus spot, we are overall at approximately 200 million, not counting the 1,900 I just mentioned earlier, which is down here. At least a few have placed themselves at this flag down here. And this is still the case. They are present all the time from about 1,550 to 1,400, roughly. Institutional players are placing large orders here all the time. On average, that's always 200 million. US dollars, which is even a bit more here, so around $250 million US dollars that we have here in total, which can be seen regularly and repeatedly, that they are at least placed over the weekend, maybe paused for a day, then placed again. They could, of course, be spoofing orders, but still, for me, it's still an interesting level. And even if we look above us now, we have a massive amount of rejection levels above us. And those are not so uninteresting. What do we have here? 200 million on Binance, 50 million on OKX being shorted. So that's $250 million right there. And then another 30 million in spot being sold off at prices from 2,100 to 2,300 US dollars approximately. And if we take this into account, we could roughly reach these price target levels. Accordingly, it will be interesting to see if we get a big Sunday move today, or if we won't see the next major move until tomorrow with the market opening. On that note, feel free to leave a sub and a like, and see you next time.